Next, we have our panel, The Great Controversy. Blockchain is seen from the major institutions' perspective. Your moderator is David Drake, founder and chairman at LDJ Capital, book author, contributed to the U.S. Job Acts. Please welcome David. Dr. Nouriel Roubini, CEO of Roubini Macro Associates, co-founder and former chairman of Roubini Global Economics, predicted the global financial crisis in 2008. Please welcome Dr. Roubini. Tone Vays, ex-Wall Street professional, crypto and blockchain educator, researcher, and consultant. Please welcome Tone. Thank you.
Thank you for that.
Okay. I was born in Turkey, then from Turkey moved to Iran, then to Israel, then to Italy, where I grew up. Went to college there, and then I came to US to do my PhD at Harvard, then taught at Yale, ended up at New York University over 20 years ago, and then I went to Washington, worked in the White House for 2 years during the Clinton years. And then I became an expert, I would say, mostly of financial crisis. First as an academic, then in policy circles, and maybe I became more of a household name in 2007-8 during the global financial crisis. I was one of the few economists that predicted the global financial crisis. You know, literally a year ago, August 2008, there was an article in New York Times Magazine titled "Dr. Doom." It was talking about me predicting the financial crisis, and since then, the nickname Dr. Doom has stuck, even if I tend to say I'm a Dr. Realist rather than Dr. Doom. And I would say my expertise in global macro is financial crisis, asset and credit bubbles, systemic crisis. I've written several books about it, and I've been in policy and predicted financial crisis. And my expertise in this crypto blockchain came from the fact that when there is a bubble, I can see a bubble based on my academic, policy, empirical research experience. And that's where I came and said, this is the mother of all bubbles that in the last year, actually, I think has gone bust already.
Well, thank you for that, Nouriel. Well, Tone, a pleasure having you here. Love to hear about your positioning with Bitcoin versus non-Bitcoin.
Sure. So I'm Tone Vays. I spoke on this panel earlier in the morning. I'm not going to talk too much about myself. Come from the background in financial engineering, worked on Wall Street, was at Baird during the financial collapse, joined the crypto space around 2013, 2014, and now I actually could be a trader, but now I mostly travel, speak at events, and run a YouTube channel with daily videos explaining everything. Just my quick comment on my outlook on the space. I pretty much disagree with Nouriel that everything in the crypto space is useless and is not functioning. But I mostly agree with him because only Bitcoin, I believe, is actually useful, and everything else is either totally useless or outright scammy and fraudulent, more to the latter than the useless part, but anything scammy is also useless. However, I also completely disagree with the prior speaker, Alex, that debated Nouriel Roubini, that because he thinks Ethereum is actually sustainable or useful. So their debate would have been extremely frustrating to me from both sides.
So you see, we have a nice mix of people on the panel. Thank you for that, Tone. Well, let's go in and discuss what's happening with institutions. Who wants to go first to talk about what you're seeing in the institutional space? Any takers?
I mean, I can jump in. To be honest, I haven't seen much. All I've seen is talk about the institutions getting in, but as far as I'm concerned, no one really is. Because Bitcoin and crypto, it's totally unregulated market. And institutions have to follow regulations. So it's not exactly easy for them to get in. I honestly think it's all hype. You can tell the institutions aren't really in, but the low volume on the futures market. That's like the only legitimate product within the crypto space you can trade as an institution, and the volume there is tiny. So I honestly don't think they're getting in. They're probably researching it, they're looking at it, but I don't think they're in. Maybe some hedge funds have bought into Bitcoin, but then there's also custodian issues. I mean, even hedge funds have to follow regulations, and now they're responsible for their own storage of Bitcoin. Hopefully they only bought Bitcoin, but you know, securing your Bitcoin is almost like securing nuclear waste. You really need to know what you're doing, or it's going to get hacked from you, internally or externally. I think it's more hype than actually getting in right now. I was going to say 90% of Wall Street, they're middleman. 90% of everything done on Wall Street is being middleman, and I think they're trying to figure out how to be a middleman. That doesn't mean they're going to buy into crypto. They'll replace Ethereum with a centralized platform that works a lot better. They're trying to figure out how to be middleman.
So Nouriel?
Well, I think I agree with 99% of what Ton was saying. You know, he believes in Bitcoin, but thinks that everything else from blockchain to cryptocurrencies are scams or a fraud. I would agree. Maybe Bitcoin is not a fraud, but is not scalable. So it's nice it's there, but doesn't have any future. We probably disagree on that. Even Sterling
I can
said,
debate that, but not here.
you know, but we can disagree on Bitcoin. You know, even Sterling said that, you know, there's tons of scam. Maybe half of this space is a scam. So the data suggests that 81% of SEOs are scam, another 11% have essentially failed or are dead, and the remaining 8% have lost 95% of their value this year alone. So this entire space is collapsing. So institutions are not to invest into stuff that's collapsing. You can create a fund, you can create a fund of fund, you can create a hedge fund, you can create whatever you want to. But if you invest into assets, on average lose 95% of their value in 9 months, nobody's going to invest in that space. Why would anybody want to go and lose money, right? Unless you're trying to short this space and make money that way. So there's a lot of talk about the institution getting there, but this is a space where you have lost 95% of your wealth if you entered it this year, so nobody's interested. Plus there are all the regulatory constraints, you know. This is a space where the typical ICO is a security, but is a non-compliant security and goes against skirting every security law. You have institutions that have to follow security laws. How do you expect any of these institutions coming in this space where you have a bunch of criminal and scams? There have been attempts by the Winklevoss brothers and others to create an ETF for Bitcoin of crypto. Rightly, the SEC told them several times, are you guys crazy? Are you guys nuts? There are academic evidence that this market is totally manipulated. Do we want to create an ETF open to everybody where the price of these things are manipulated day in, day out? Hundreds, thousands of pump and dump schemes, spoofing, wash trading, front running. That's what the market is all about. How do you expect anybody who's an institutional investor who has to be compliant with all the rules and regulation, KYC, AML, is going to enter into this space? It's just nuts. It's just delusional. A bunch of people in this space who are just trading shit coins day in, day out, who have lost all of this value, and no serious institution is going to seriously think about it. That's the reality.
All right, so we have a different opinion. Just a slight.
99% of them are going to fail. I would say 99.99% of them are going to fail. Maybe a few years from now, there'll be only Bitcoin. There'll be just
that's my view on things. That's my view on things that will be Bitcoin.
I agree. Bitcoin's going to be there. It's going to work close to zero, but it's going to be there. But there are inefficiencies. No, there are inefficiencies in the financial market, and there is lots of stuff is happening in financial institutions to change it. It's called fintech, right? But fintech has nothing to do with blockchain. Why do you need blockchain? It's based on AI, it's based on big data, it's based on Internet of Things, it's revolutionizing payment system, insurance, credit allocation, capital markets, asset allocation. Has nothing to do with blockchain. You have today billions of people in China, in India, in Africa, in the US, billions of people doing billions of transactions every day using digital payment system. It's called Alipay, it's called WeChat Pay, it's called Venmo, it's called M-Pesa, it's called UPI system in India, it's called Square, it's called PayPal. Billions of transactions a day, billions of people. What has that to do with blockchain or crypto? Zero. Zero below zero, has nothing to do. And those are real firms with real projects, with making real money, who are really revolutionizing and democratizing the financial system. A poor farmer in Kenya can use M-Pesa on his own mobile phone. It has nothing to do with blockchain. It can borrow money, can lend money, can do transaction, can make a living out of it. Why does it have anything to do with blockchain? There's nothing to do with blockchain, the fintech revolution. Well, it's all talk. It's all bullshit.
Can I jump in on that to answer that?
Yeah, you go ahead and I will say something.
Yeah. So look, I do agree that right now, Bitcoin and blockchain in general is not the best competition for the payment system. I'm not going to debate that part. Now, what Satoshi Nakamoto created with Bitcoin, the peer-to-peer digital cash, so Bitcoin's blockchain, I don't care about the rest of them. Bitcoin blockchain competes in 3 ways. For the first time in human history, you have an asset that is unconfiscatable. Now, the only way to have an unconfiscatable asset is to not have a physical form of that asset. Your real estate's confiscatable, your car is confiscatable, your gold bars are confiscatable, your money in the bank is confiscatable. Bitcoin is unconfiscatable if you properly hold it. That's one advantage that Bitcoin has. The other advantage or disadvantage, depending on which economist you talk to, Bitcoin took the principle of gold. Bitcoin has a finite supply. It has a predictable inflation rate of new Bitcoins. So Bitcoin is also competing with the current monetary system on monetary policy because it's unchangeable because of the way the blockchain works. Now, the third thing that Bitcoin offers is unconfiscatable value transfer. This is the part that you say it's only for criminals. I don't like to blame anyone for the medium of exchange that they're using. So it's not competing on speed, even though it's not bad. It's not competing on the cost of a transaction. It's not competing on scale, though that functionality is coming. It's competing on the fact that your value transfer is censorship resistant. Nobody can stop that payment. Now, you can disagree why we need that, but these are the 3 points where Bitcoin actually competes well. As far as having 1 million transactions a second, that should be here in a couple of years. More privacy should be here in a couple of years.
I would disagree on one point. It's not true that they cannot be confiscated. The G20 has already said, and Steve Mnuchin, Secretary of Treasury of the Donald Trump administration, has said, we cannot allow Bitcoin and cryptocurrencies to become the next Swiss bank account where essentially money launderer, criminal, terrorist, tax evaders are using essentially something to evade the laws and regulation. And the trend is going to be that, I'm sorry to say, there is not going to be anonymity in Bitcoin or any other cryptocurrency. If you have any crypto asset, you have to declare it. I have to know that you have that money. If you make a capital gain, like me and you, we have to pay taxes on those capital gains. Means anonymity is gone. there is not going to be any government anywhere around the world, not even the US of Trump, is going to accept anonymity.
I agree
nonsense.
that they want
once
that.
it's not anonymous, can be taxed, can be confiscated, can be restricted, can be everything like any other asset. It's a delusion to believe that this asset is anonymous and cannot be confiscated.
They don't want people smoking weed either, but they can't stop it, right? Like they want that, but there's nothing they can do about it.
Something that's digital can be controlled better than something that is not. It's going to be controlled, regulated. You're going to be taxed on every penny of it. There is no freedom. You talk about the centralization. It's bullshit. You have massive centralization of miners. 75% of all mining is controlled by 3 or 4 miners. That's a concentration of risk. Miners in Russia, in Belarus, in China. So it's massive concentration.
Can I correct that?
There's concentration of exchanges. All the decentralized exchanges do nothing. 99% of all transactions occur on centralized exchanges. The centralization of developers who control everything and change the law as they wish. Code is not law. They can change any time. And there's massive concentration of wealth. The inequality in Bitcoin space is worse than in North Korea. Gini coefficient of 0.88 in Korea is 0.86. It's pathetic. You talk about decentralization. This system is the most centralized system ever. Minor exchanges, developers, concentration of wealth. It's all bullshit about democratization of finance and freedom. It's nonsense. It's totally self-serving. It's the opposite of democracy in financial system. It's just the opposite.
Let me challenge that.
Go ahead.
I might agree with you on exchanges. The exchanges are a little bit centralized. Miners, there's a misconception about miners. You're not a miner when you are running a mining pool. So a mining pool that controls 20% of all mining is not controlled by one person. It's a pool. You can come and go. It's kind of like saying JP Morgan, the accounts of people in JP Morgan Chase Bank control 20% of all Americans' wealth. No, it belongs to the people, they can choose to go to another bank. So the concentration of mining isn't as bad as you say. It's not great, but it's not as bad. Development, there is certainly decentralization in development. You can't even get a minor thing into Bitcoin, as we saw with the huge debate that even split it between Bcash and Bitcoin. The miners and all of the exchanges and everybody important wanted one thing, and people like myself wanted something else, and guess what? The people won with the user-activated software.
Vitalik Buterin is a benevolent dictator for life. That's
Vitalik, yeah, I agree with that. I'm not going to debate that part. Vitalik is certainly a dictator for life. We'll
benevolent my ass.
As concentration of wealth is another misconception. I know they say 0.1% of all wallets control like 50% of all Bitcoins.
Not 50%, 99%.
90%. Well, first of all, a lot of those wallets are dust. They're empty. They're just, you can create these things infinitely. You got to get rid of the dust accounts. You only got to look at wallets that actually have some wealth in them. Also, some of these statistics are so fraudulent. Again, they're using Coinbase wallet that is holding Bitcoin on behalf of like 100,000 people as one person owning the Bitcoin. That's also ridiculous. Also, because you can't print your own Bitcoin, there's no interest. No matter how much Bitcoin you have no advantage to earn more Bitcoin. So sooner or later, you're going to end up using it. So this is the best part. It doesn't matter if the guy is richer than you. If the fact that he has X amount of Bitcoin doesn't earn him more Bitcoin, which is why proof of stake is ridiculous. And I'll agree with you there as well.
I want to add. We're wrapping up. Sterling, last word.
Yeah, I want to add a little tidbit to this idea of mining centralization. So really, in my mind, that problem is overstated anyway. And this is the reason why it's overstated. The big fear is that one of these mining pools could theoretically perform what we call a 51% attack and thereby be able to conduct double spins and thereby undermine the people who use the cryptocurrency. But most of these miners, even if there is a theoretical 50+% of control of the miners, they're not going to undermine themselves, because if they attack their own network essentially and try to steal a little bit of money, ultimately they undermine all of their own profits via mining, their own companies. So the incentives are aligned in such a powerful way that they're not going to undercut themselves unless they can overcome those incentives somehow and end up making more money. The network has to be very small for a 51% attack to really cause any damage, and then even if they did do it, it wouldn't necessarily destroy it. For instance, Zencash just recently had a 51% attack, and you need a crypto at a higher level, because if you're going to 51% attack a crypto, you need another crypto above it to move that money into. And this is why no one will ever attack 51% Bitcoin, because then the whole system dies. You have nothing on the upper level to move your money into.
There have been already hundreds of 51% attack against smaller cryptocurrencies. That's the reality of it. Yeah, it's hard to do a 51% attack on Bitcoin, but come on, the 51% are occurring every other day. Every other day.
It's a heated discussion. Last words for me then, as we're up like 5 minutes ago. I think we'll agree to one thing, most likely. Crypto is not disappearing. How it's going to be dealt with? Well, we didn't get to that question yet, but hopefully SEC and FINRA will tell us here in the US how to deal with it. Well, give everybody a big warm applause. Thank you, everybody.
Thank you to our panelists. That was a lively debate.
David? Thank you.